Hey, what's up everyone? JT here. Welcome to Pineapple Money, where I talk about stock market news and investing for the long-term portfolio. As I'm recording right now, it is currently October 30th of Friday, and the market's just closed today, as you can see right here. And it looks like the broader market is technically down. S&P is down 1%, as well as the whole big indexes, S&P, Nasdaq, and Dow are also down. Looks like tech got hit hard in particular. So I actually thought it'd be kind of appropriate to make a video like this, and a video specifically on when to sell shares. And I'm actually looking at you, Hyliion or Workhorse or Chargepoint, and I'm sure if you're invested in a company like me, you probably are feeling this pain because you can see the bleeding red from them. Now, the question you're probably asking is when to sell shares. Is it time to cut losses, or is it time to take my profits and dip out? Well, I hope to try to answer that question with this video, and also my own thought process on how I got there. But if you're not invested into any of these specific companies that I listed above, I would say continue watching this video, because these rules that I do list right now are all implemented into the stocks I invest in. Now, I'm going to break down the video into sections. First, I'm going to break down different reasons why I might sell a stock and give scenarios to help answer that. And second, I'm going to specifically talk about what reasons need to change and what price targets I would sell shares for Hyliion, Workhorse, and Chargepoint. But before I do continue, if you do find anything interesting in this video, please don't forget to hit that like button down below and subscribe for more content. I would super appreciate that. And also let me know down in the comments what you're planning to do with your shares as well. And just to remind anyone who is tempted, I'm not a financial advisor of any kind, so please do your own due diligence before investing or exiting a stock. Thank you. Alright, let's continue. I'm going to break down my reasons why I typically end up selling my shares of a stock. And there are 3 rules I typically follow. And of course, since I'm not giving you guys any advice and I'm kind of just talking to myself right now, I'm going to assume that I've already done my own due diligence and researched before even putting any money into a company. So let's go to the first one out of 3. The first one is fundamentals. And what I mean by fundamentals is pretty much, is the company operating differently? Did the mission goal of the company change? Has the company become involved in nefarious practices, or have they lost profitability, for example? In general, I would say a lot of things in regards to how the company functions, and especially when a company is at the lower point, I can ask myself, did something change that maybe want to consider selling my shares, or maybe put more money down into the company itself? So the basics backbone of a company. And now let's go to a fun example. A fun example could be a company called Nikola. Let's say I invest to Nikola because of the great hydrogen commercial truck I saw a couple years ago during Nikola Day. But I learned about the advertisement, which showed that their trunk was actually rolled down a hill, which I can see all these headlines right over here. Or even Trevor Moulton's strong PR was the reason why I invested into the company. And after he left Nikola, I don't see as much value into Nikola themselves. So things like that change the fundamentals of the company, whether it be the staff or how they presented themselves, is what I would give a valid reason why I would sell some stock. So I would say a more practical example would be in 2020 would be if a company stopped becoming profitable due to said illness, which of course affected a lot of travel companies and hospitality companies. Say I was invested into Carnival cruise line, which is a major cruise line ship liner, and since of said illness, they are not serving any customers at sea, and fundamentally all the ships have stopped, hence not making any more profit. I would say that the company functions have changed, which I would say is a pretty good reason to sell. So just to wrap it up, I would say one good reason to sell a company is the company's fundamentals. If something did change, I would say that's a pretty good reason to sell the shares in them itself. The second biggest thing I want to consider is taxes. And taxes are a big thing to consider, especially when you are investing. There are different factors in play for taxes, and I don't want to get too much into it since there's a lot. Taxes could be its own separate video. I do want to emphasize there are 3 major points in taxes that I want you to consider, especially when selling a stock. The first one is a tax bracket. So everyone in the United States has to pay federal taxes, and we are all sorted into different tax brackets depending on our income levels. So depending on what income level and how much you make per year will determine your tax rate. So for example, let's say I make about $75,000 a year, I'll have a tax rate of 22%. So depends on what you're making, you can determine what tax rate you're in. So the next point is short-term and long-term. So stocks are divided into two things, short-term and long-term. Very simple. Short-term means that you've held a stock for less than a year. Long-term means you've held a stock for more than a year. And it's really important to know the distinction between these two since they will be taxed differently. So let's go into an example. Let's say I've held Tesla stock for less than a year and I decide to sell it. This would be considered a short-term capital gains tax. And let's say now I've had Apple stock and I've held this stock for more than a year, way more than a year, and I decide to sell it. This would be considered a long-term capital gains tax. So there's a big difference between these two because they are taxed differently. Now, as we look at the comparisons right here, you can kind of see with short-term capital gains tax, you'll be taxed at your normal income tax level. So, and for example, my situation, $75,000 a year, I'll have a tax rate of 22% for my Tesla shares that I did sell since it is short-term. But regarding my Apple shares, since I've held it for longer than a year, I'll have a tax rate of only 15%. So there's a 7% difference. And 7% is a big difference, especially when you're working with very big numbers. So in essence, sometimes holding for long-term can sometimes be more beneficial depending on your situation. From the prior two concepts of tax brackets and short-term versus long-term, they both play a role into your profit or losses right here. So in regards to taxes, you have to pay for whatever gains you have in the market. And sometimes you do have an option of offsetting that tax with a loss right here, as you can see right here. So on a small scale, let's say I want to sell Tesla shares. And because I made huge profits, I want to sell it right here, right? And to offset some of my given tax rate of 22%, I want to sell Apple at a loss to kind of just offset those given taxes. And rather than having to pay taxes directly, I can just sell some shares and that will just lower my taxes that I do have to pay to the IRS. On a big scale example, let's use the exact same concept and we can apply this to Trump. So Trump allegedly, this was a report that was given from the New York Times, allegedly he has to pay $750 in federal income taxes in 2016-2017. And as we know, Trump is very, very wealthy and in the 1%, but Trump reported that he had an enormous loss and that he was able to offset that pretty much from the taxes he had to pay. Exact same concept, just on a bigger scale. But yeah, this kind of just really demonstrates on a bigger scale that taxes is a game pretty much and we are playing with it. We just need to know the rules to win. So kind of need to recap for taxes in general. There's a lot of information, but there are three factors to quickly understand. First is your tax bracket. What tax bracket are you in? Second one is short-term, long-term, and how long you've held a stock for. And of course, profit and losses, and this will determine whether you can offset taxes or not, depending on your losses, of course. So like the saying goes, death and taxes are the for sure thing that will always follow you wherever you go. So before making any sort of sale, especially in stocks, it is important to know the tax consequences or benefits afterwards. And personally, I consider taxes usually the best thing to offset any major gains I've had in a year, especially if I get pushed into the next tax bracket on accident. And the third thing I think is also really important is you need cash. So whenever you sell a stock, a good reason can also be cash, because sometimes you just need liquidity and cash can be used for a lot of things. And honestly, cash in general just gives you the freedom to do whatever you want. And there's nothing wrong with needing cash. We all need cash. And for example, maybe I need cash to pay for rent, or maybe I need cash to buy another stock for a higher opportunity. Things like that, because cash is just liquid and can be used for a lot of things. Cash alone is very underrated, but still a very, very valid reason for selling shares. Cash is king for a reason. And now, I know I didn't mention this fourth factor, but there's another rule I typically follow, but this only applies for short-term stocks. I think the term price target is kind of straightforward, but what I really mean by price target is that when I enter a stock, I know full well that I potentially don't want to hold it for forever, and I want to exit and of course have a plan. And of course, in that situation, that will be the best choice. And the reason why I say that this only applies to short-term swing trades because long-term investments are considered investments, of course, so they will be considered a buy and hold strategy for me. An example of this would be if I enter a stock called Peloton. And Peloton right now, I see has a lot of potential because right now, since everyone is at home due to said illness, Peloton can profit very highly because Peloton, if you're not aware, is a fitness program and a bike that can be used at home. So Peloton is very helpful right now. But I am thinking that once the economy returns back to normalcy, Peloton won't be as profitable. So once it hits my price target, for example, maybe say $200, I will want to sell out. And currently, I think the share price is about $120, but $200, let's say example, is my price target. So I have a plan that when it hits $200, I will sell out and just get out. But of course, the reverse plan can be also applicable too. So example, if the stock trends downwards from what I'm more comfortable in holding, let's say I have an exit plan of 10%, just in case if it trends downwards and I don't want to hold it for the long term. So I kind of just want to emphasize that price targets mainly applies to short-term trades and swing trades and shouldn't apply at all to long-term investments at all. Long-term investments are in the title on investments, and it's a buy and hold situation, which is like forever. And to just quickly review when I would sell my shares, I want to consider 4 guidelines right here. The first one is the fundamentals of the company. The second one is the taxes I get when I sell a stock. And the third one, the reason is it could be for cash. The last one, of course, only applies for short term, but that will be your price target. So when selling shares, I kind of just wanted to keep in mind of these 4 guidelines right here, okay? Let's continue. Now that you understand my thought process on when I will sell my stocks, let's get into what I am doing or did specifically for Chargepoint, Workhorse, and Hyliion. So let's go in the first one. Let's go look at Chargepoint. So right now they're under the ticker of SBE because of course they're right now a SPAC. Currently the stock is trading at $13.23. They closed that on Friday, October 30th. And ever since their SPAC announcement back, I believe in September over here, you can kind of see, they have been shooting up since then and also been following the broader market. In general, I would say that Chargepoint is currently a speculative play because they are technically still in their pre-IPO phase or before the reverse merger. And personally, I did get into shares around $13 right here when they announced their merger. But long-term wise, I do believe Chargepoint and I do see a sustainable company for the long term since there are electricity and giving out for the future of EVs. However, I did end up selling my shares around $17 at their most recent high. I sold them because I simply needed the cash. And with the upcoming elections, I wanted cash to hold. And since this is actually considered a speculative play, at least in my book, I knew it was a high risk for me. So I sold this off first. So currently they are trading around $13. And this is actually around the level I did pick up my shares at when they announced their SPAC merger. So I'm actually considering to get a position back in. But if they do manage to trade below $12 or maybe $11 to $12, I will definitely start nibbling up some shares to start a small position again because long term, Chargepoint will be growing. Workhorse stock. Workhorse is a crazy stock. They are currently trading at $15 a share and did close around $15.38 today on October 30th. And for the day, they are down 10%. Of course, they are following the broader market right now as the broader market is down as well. But still, wow, 10% is a lot. So fundamentally, I would say Workhorse is currently in a limbo state, kind of just waiting for the USPS contract. And while there are also other reports that they are able to be profitable without this USPS contract, I'm sure a lot of investors and Workhorse are still waiting. Now, personally for Workhorse, I never owned any shares of Workhorse previously. I did held call options for around at a $30 strike price for January 2021, but of course I sold them once Workhorse was kind of trending downwards, and I decided to pick up some sell puts. So I'm actually currently in Workhorse for 100 shares at $16. So $16, of course, lower than the $15.38 right now. So what am I doing with my shares? Well, I'm actually planning to hold it for the long term. Currently at my price point, I do believe I have leverage for a strong upside. And as Workhorse is one of those few strong competitors for the last mile delivery, I think it will hold a good spot in my portfolio. Now, in my personal opinion, if I held shares higher than $25, I would actually start to consider whether if I need this cash for other opportunities. Because right now, there is a lot of uncertainty with elections, the illness cases, and especially the unknown of the USPS contract announcement. There are multiple variables in the air currently. And I believe I would be able to actually make a stronger return in another company rather than holding my money in Workhorse, because I might be able to actually make more gains back. But of course, this is just my own opinion. So upcoming in the future, Workhorse does have earnings scheduled on November 9th, and they are having EPS estimates of about at negative 10 cents return and revenue of $1.81 million. So after these earnings, investors like myself can probably get some more context to see where Workhorse is actually going for the future. And of course, we want to know what they want to do in the short term and long term as well. And currently, Zacks does give it a hold rating. So looking at our big friend Hyliion, I believe I currently have about 110 shares of Hyliion or so. And honestly, I think I'm down like 25%. So it's pretty painful. So currently, Hyliion is trading around the $18 to $19 range, about $18.92 when they close out today on Friday. They are down 5.6 of the day, and they are, of course, moving with the overall market, since the overall market is going down as well. So currently, Hyliion hasn't really made any new announcements or contracts of any kind that I'm aware of. So I would say they're kind of in a limbo state too. They're kind of just waiting for news, or they're just kind of grow, because right now they just recently merged the past month. So what am I doing with my shares? So given that I have about 100 shares of Hyliion, I am currently selling some covered calls. So covered calls, for those who are unaware, is that pretty much I'm selling premium at a current strike price, and whoever decides if Hyliion does reach that price target in the future, I will get to sell those shares at that price. And it's just kind of a way to reduce my own cost for holding on to these shares for so long. So when would I actually sell Hyliion? Well, when they've had their reverse merger, I was actually very adamant on holding the shares for at least 2 years. Since that is usually also when the Hypertruck ERX will come out, I'll probably want to see results into that product is released to other customers. Now looking back, honestly, if I knew they were going to drop like down 50% like this, I probably would have sold when they IPO'd that date. But honestly, hindsight is 2020, and I'm not gonna lie to myself, I did probably buy into the hype, but it is what it is. So in the future, currently Hyliion does have a looks like they do have a financial report upcoming on November 12th. So on that date, I'm sure we can get some more context to see where Hyliion's headed, and hopefully they'll have some more news for us, because Hyliion is hurting a lot right now. They are down pretty heavily from their highs around $55 or so. But yeah, that's kind of where it is for now. But the past is the past, and currently I don't think I'll be selling any shares anytime soon, just because I am in it for the long term now. And given that Hyliion has not really changed fundamentally and is kind of stable on its own, I'll keep my position. Now, the only reason I would actually sell Hyliion is if the Hypertruck ERX, which I'm sure it's going to come out about a year or two from now, somehow fails, and that's the future for this company, since that's what they're pushing towards, I would definitely bail out this company. But other than that, I'm going to hold it for long term, and we're going to probably see what happens in the future. Alright, so this kind of wraps up my video for regarding when I'll plan to sell my stocks, the overall general consensus, as well as specifically Chargepoint, Hyliion, and Workhorse. I super appreciate it if you stay towards the end, and hopefully you found something interesting in this video. Other than that, don't forget to hit the like button down below, and let me know down in the comments what you're planning to do as well. Thank you for watching. Peace.